Hi traders, what's going on? Dale here. I've cleared all the levels off my charts across every market in my watch list. Wanted to do this video where we're going to be looking at a more macro view of support and resistance, mainly focusing on focal points in the market. Where is it likely to turn? What kind of structure do we have? Spent a couple of new people coming through, and support and resistance is obviously something us more veteran traders just do unconsciously, I guess you could say. Like when you learn to drive, you just do it. You don't need to think about it. You're changing gears, whatever. But I do forget sometimes the basics are important, and hopefully this video will be a bit of a refresher. But yeah, we're just going to focus on the turning points, plotting out like when we're looking at a chart. And when we're dealing with support and resistance, a lot of newer traders want to go through and mark everything out: swing levels, intraday levels, trend lines, boxing things out, like just marking too much stuff, where we just really need to know what the structure is of the market and where the focus points of the price action is, like where the market's likely to turn, so we can work with that. So we'll walk through. So we're starting off with the S&P. The S&P is in an uptrend. It's a very nice textbook uptrend. We got higher highs and higher lows, so we can see the peaks higher. Obviously, this doesn't this footprint doesn't continue in a robotic fashion. We'll have some kind of sideways pauses. Here we get a bit of a range, and we get some more complex correctional structures in that. But overall, the market is in an uptrend with the high, higher low kind of structure. In a trending market, the levels that you really want to focus on is, well, you generally will find like a channel or a trend line, but yeah, around the moving averages, or if the corrections are a little deeper like this and the moving averages aren't holding as that dynamic support or resistance, you'll get more of a trend line structure. So we can see that here. We just forecast that across there, something like that. Generally, you'll see with a trend line, you'll see multiple points on it. At least 3 you'll need to verify that it's a trend line. 2 points is not enough to verify a trend line, because if you're just using 2 points, you're going to have trend lines going everywhere. And I've seen some pretty messed up charts when people just use 2 points for a trend line. But 3 points for a trend line at least. You can see we've had multiple touches of this trend line. This is the focus point of this market for me. I've got some crazy stuff going on here with orders. I'm not sure at what point you're going to be watching this video, how evolved this grid system is going to be. But at the moment, I have a prototype of a grid money management system. So I don't know what's going to happen with this in the future when you're watching this. But what I was basically doing with the S&P, because it's been such a powerful market, I've been focusing a lot of attention on it because, you know, this is what money likes at the moment. You got to focus on what money likes if you're following trending markets. And the S&P's just got so much money flowing through it at the moment. We're getting such beautiful trends out of it, such good follow through. So I looked at the structure of the market and found the focus point, which is this trend line. And I waited for the market to come back and test that trend line around here. And then I deployed the grid, because that's the point where I want to get into this trend. We do not want to start getting in around here when the market's breaking into new highs, generally because the corrections will just stop you out. You would have got a bit of follow through here, but then we got this correction. You would have actually gone into the negative, and a lot of people probably would have moved to break even or cancelled their trade or done something emotional. But if you get in at this trend line, you're almost getting instant gratification here. This is a really clean chart right now, especially with this trend line being our focus point. Anything that's happening around that trend line, any kind of bounce, is leading to very good success. So essentially, this is all I really give a crap about at the moment on this chart, is this trend line, nothing else. And we need to see some really big evidence that this market's going to turn around, like do some sort of big counter trend reversal, but we're not seeing anything like that yet. So keeping it simple, just focusing on that trend line, that's all I need to worry about. That's all I need on my chart right now. So let's move on to the next one. And this is all unscripted, by the way. I haven't gone and taken notes. I'm just looking at these charts raw. I've been doing like 2 weeks worth of programming, updating tools and stuff. So I've lost my finger's been taken off the pulse of the market. So I'm a bit unfamiliar with what's been going on. So the US dollar has had a bit of a bullish run, but we're a little bit choppy. I wouldn't really call this a nice trend, because even though we would say this is a bullish market, we don't really have that nice higher low pattern like we had on the S&P. We did get it here for a little bit. This is a nice solid vertical move, but I wouldn't really call it a trend. In my view, a trend is something that is a more sustained environment, not like a burst breakout like this, like a vertical move that's really strong and fast. I would more call that a breakout. A trend is a sustainable environment where you can enter the trend and it gradually steps up through high highs, high lows, or the opposite for a downtrend. But we don't really have that here, and that can make the market hard to work with. So we've got a bit of a mess going on here. So what I would do is look on the weekly chart and just see what's going on the macro side. Now that just changes the picture quite a bit, doesn't it? Because if you have a keen eye, you would have spotted a range right now. So what I would do is the focus points for the 10,000 foot view here on the weekly chart is a range. So we will just plot the top here and plot the bottom. Now don't worry about trying to line up every single candle like perfectly, because we only really want to focus on what is relevant now, not what happened in the past. Like, you're not going to get these picture perfect levels that you just mark and they just go right back through history and line up all the turning points of all the swing points and candles and everything perfectly like that. Just want to happen. We're concerned with what's happening now. What's happening now is there a ranging market going on? Until otherwise, we just want to mark the focus points of that, which is the top and bottom of the range on the weekly. Then we can go down to the daily and we sort of get a better picture. Before, we were looking at this in the middle of the range here, looking for an interpretation of a trend and trying to understand what's going on here. But now we can see the macro view as a range. We zoom out a little bit, and it's quite a wide range, a wide ranged range, but it's still a range, and the market is still cycling up and down through these. So where do you want to get in this market? Well, the perfect spots are the top and the bottom here, and we even had a rejection candle on the daily chart there. So if we were watching the daily chart with our support and resistance lined up like this could have been a nice counter trend play here, and you can see that fired off quite nicely. So it's not always about candlestick signals for you newer guys. You don't just look for the candlestick signals. You mark out your technical analysis first and then look for the candlestick signals to form in the locations you want to be trading at, and those high value hotspots and focus points like this. All right, so that's how you do it. Like a lot of people get it wrong. They just look for a candlestick pattern, and we might say, like we have one here, like a rejection candle, and it's sitting on lower lows. Like, what area is that? We're not buying off we're not selling off lower highs. We're not following any kind of trending structure there, but we're trying to enter a trend. It gets like when you really say it out loud, it sounds stupid, but if you're not really thinking about those things, you'll just get into these kind of trades and get pushed around and bullied by price action. So if you focus on the key points in the market, like really the macro stuff, if you just want to keep it nice and easy and you're a beginner, focus on these macro locations, these focus points, and look for the signals there, and you'll have a better chance of seeing follow through in your trades. All right, and we're going to go through a lot of markets here. I'll hopefully power through them, but there's a lot of opportunities around. If one market's not doing it for you, then obviously just check through the rest, and you don't have to trade every day, obviously. Okay, so my tip for what markets to follow is, obviously, again, you follow what money likes. money's liked Bitcoin in the recent years. Crypto, that goes on and off. That goes through cycles. Gold goes through cycles, especially in risk-off scenarios. Okay, gold is very popular. The S&P, any kind of index at the moment, any stock index has just been pumping. So those currencies have been crap. All right, they haven't been good at all because all the money has been going over to those other commodities and indices and stuff and Bitcoin. So let's move on to the next chart, and it's Bitcoin. All right, so Bitcoin, very popular market, just was really easy to trade for a while there because the money was like really flowing through there. The money really liked it, so it was just easy to pick off a buy trade with the trend, and it would just follow through just from a lot of hype. But the crashes have been just as strong as well. So just following the price action here on the 12-hour chart. Actually, we'll just switch to the daily. So yeah, you can see that nice run up there. Okay, so what do we got going on here? Well, remember, we just want to focus on the current price action, all right, and map out the structure that the current price action is respecting at the moment. We want to map the behavior of the market with our levels. So really, again, it's another range here. Oh, what did I put down? I put a trend line. So, and this is even on the daily chart. But because Bitcoin's been such a parabolic market and been so volatile and so reactive, it's doesn't have too much history to work with, but we don't really care about that. Like I said, we just want to map the current price action. And sometimes, hey, even when you do map the levels out, like I said before, you don't have to have them go right back through history and line up all the swing points. But sometimes they do. If the level's very clear, we look back here and here, we can see that the levels lined up very nicely. So sometimes it does happen, but we only really care about the current structure of the market. Some people ask me, well, how far do I have to look back for support and resistance? You know, how many candles do I have to have on my terminal, like on my trading screen, visible? Well, those are a little ambiguous, those questions, but really it just comes down to this, like just mark the structure, okay, like from the macro view, and work your way in. And if you can't make sense of what you're seeing on the chart, zoom out. And when you zoom out, eventually some sort of structure will become available and you'll see it, mark it out, and then you can start working your way back in and trying to figure out what you want to do. But usually the answer is on your zoomed out daily or on your weekly or something like that. So we go on to the 12-hour. So what are we going to do? What are we going to do here? Okay, what would be the plan here? Well, it's a range. We just want to look for ranging opportunities. We just got to be a little careful because we've had a very strong vertical bullish move here. So to sell into that, we'd need some strong evidence. We did have a rejection candle here close to the level, but didn't really touch it. Got close. This can be kind of like a bit of a trap trade or sort of like a prelude to something that's happening. So we had some harsh rejection, and then the market's going to come back up here and retest that level. If we start to see harsh rejection again, then the story is going to start unfolding for us. Then we're going to start seeing strong evidence that we may want to sell that range top. All right, but this hasn't really been the most sexy range. But let me tell you, like with a ranging market, you really want to see the market swinging nicely from the top to the bottom, but we haven't seen that here. This is quite actually ugly, this one, and trading this would have been a little frustrating. You can see from here to here was nice, but we had a nice buy signal down the bottom here, and it would have worked out if you held really strong, but it would have taken a while. And you can see the market actually came down and tested the level again before it actually moved up. So, and even from up here, we didn't really come down and cycle all the way to test that. So some ranges can be really ugly. You just got to evaluate that when you mark them out. But we go back to the US dollar one. This is a sexy range because the market's cycling through the upper and lower boundaries nicely. So if you're catching trades on the top and the bottom and holding them, eventually they're working out. One trick with or one early warning sign, I'll give you a tip here that the range isn't going to work out, is if you see, it's like in this case, we will see the market cycle down and it doesn't actually reach the range support here. It actually bounces off a higher low and comes back up here. Now this kind of event right here can be an early warning signal that the range the price action is building to break free from the range, because if we don't get a full cycle down to the bottom, we start picking up off high lows, or the opposite for a bearish situation. Be on alert here, because we could see a breakout. And if you want to do some more advanced, anticipation type price action trading here, you could probably, if there was a nice juicy buy signal here, you could probably go for that one. And I guess your hypothesis would be that the market is building off a high low and ready to tackle that range top and break free. You'd need a strong signal here though. But when you do see the market not cycle down to the other, or up or down to the other side, and then move back to attack the range boundary, that's a scenario that's basically explaining, the story is basically telling you that the strength or weakness is building, the range is coming out of structure, and the market's changing and something else is about to happen. I see that a lot, and I try to point it out as much as I can and try to remember to look for it as much as I can too. But the first thing you need to do is have the range marked out cleanly in the first place, so you know what to look for, not levels and that going everywhere, because that will just throw you off. All right. And another rule I would like to explore is, in Forex, things usually come in threes. Okay, you usually get 3 tests of a level before it either breaks or fails. The range will usually test 3 times before it fails. So like here, I guess you could say 1, 2, 3 tests of the range bottom. Then we might get that scenario where it actually does pick up off a high low and goes back to the range top to try to break out of that. Things happen in threes in the Forex market. So I would like to research that a little bit more, but it's the number that keeps coming back up when I'm looking at things. All right, let's speed this up a bit. XRP, I don't think we'll look at this because it's been quite a stale market. Sometimes there isn't much of a structure going on, but here again, we zoom out, it's just a range. What we're going to find is that the crypto market at this time of the recording is highly correlated. So whatever Bitcoin does, generally they're all doing the same thing. Okay, they're very highly linked together. Whatever the money does with crypto, that they do with all of them. But here it's just a ranging structure. Okay, we've got consistent highs and consistent swing lows. It's just a range, but it's not a very volatile market again, so it's not really a great market to trade. Okay, the Euro US dollar. Again, looking at the chart quite sideways, just looking at that 10,000 foot view. All right, let's zoom out. Now here, what is the structure here? It's almost a range, but it's not really uniform there. We're not really seeing tests of the same high or test of the same low. So this is more of a larger squeeze pattern at play. So you will get your trend line. Okay. Now, remember when I said you would want at least 3 tests of a trend line before you would consider that a valid trend line. When we're mapping out a squeeze pattern, it's a little different because of the squeeze pattern here, I'm mapping out based off 2 points. All right. Now we could say that I just contradicted myself, but I'm not mapping out a trend line. I'm mapping out a squeeze pattern, and we've actually got multiple points to work with to identify the squeeze pattern coming into shape. I'm not using just 2 points up the top there. I'm using these guys down here as well. Okay, so I've got more than 2 data points is what I'm trying to say. I get that a lot. So we will map that out. Okay. And that is the Euro US dollar at the moment. Okay, in that squeeze pattern. We may be able to pick off sort of, I guess, these intermediate trends in between. We might see trades in between, but at least you know where the market's coming from and where it's going. And that's the point of this exercise today, is to highlight the structure, highlight the focus points. We can see the behavior of the market through these levels. So we know now that the market is actually going to likely pick up off here, and you can see that it is following through. And where's it going to go? Well, it's likely going to go up here to the squeeze pattern top, the structure top, the next focus point. How's it going to do it in between? I don't know. Nobody knows that. Are we going to get this horrible grindy move upwards, or are we going to get this huge explosive hyperbolic vertical move that just goes from bottom to top? Nobody knows. Okay, or are we going to get a mix of both? What we do know is the market's coming from the bottom and bouncing off the bottom and building strength, and it's likely to head up to the top here. And up here we could look for sell trades, and we start seeing follow through. We know when the market's going to probably cycle down to the structure bottom, right? So when we know when the market's where the market's coming from and where it's going, or likely going, we can pick up intermediate trend trades in between by just following the momentum here. So we could pick up buy trades through here because we know the market's bouncing off that structure bottom and it's likely heading up to the top. So we know if we do get any bullish signals off lower highs in between, we can work with that because we have the overall macro analysis to support that as well. But if we just want to go for the big trades, we need to look at these boundaries for the let that car go past, for the big reversals here. Okay, the pound. A lot of currencies are going to look like crap at the moment, which is why I thought this exercise would be good to do right now, because we're in the middle of summer trading and currencies are quite hard at the moment. So best to pick this time to actually do this kind of analysis when things are a bit more challenging. So, well, here I just think, this isn't too hard. I think we've definitely got a top there, and we've got a ranging condition here. And sometimes you'll see these fake out events as well. So you don't have to line things up perfectly. You just want to capture the structure of the market. That doesn't mean lining up every single high and low perfectly. That just means highlighting the structure, encapsulating the price action, encapsulating its behavior, and being able to work with that. So these levels are also good to catch those fake outs as well, because if you've marked the structure correctly, then when you see the market start to break through that structure, you can be on red alert for a fake out. And if you do get a fake out, that's an even stronger reversal signal. So down here, this is the weekly chart though, so this is a big weekly fake out. So now we've got that mapped out. We can see here, it's a range. Okay, it might have been harder to see that on the first look at the daily chart, and we were sort of zoomed in a bit there. We didn't really know at first glance what's going on, but now we've got this marked out, and yeah, it's a ranging market, and you can see what happened here. There's that fake out. So we got this one was not an obvious fake out to trade, I guess, because we actually got closes, daily candles closing underneath that level, but then we got that strong reversal reaction, and then it followed through. But whereas we would like to see something more like a real sharp move down and a sharp move up, and maybe a big wick through that level to communicate a fake out. But fake outs will come in all shapes and sizes. So you just got to read the situation. I know this is hindsight analysis, but I mean, if you see a break through a level and then a harsh move back through, and you get those very sharp reversals through the level, like the market's really screaming to you, no, I don't want to go down there. That can be classified as a fake out move, especially around these major levels. Let's move on. So I wouldn't know what the hell this is to call this at the moment. I can see that there was a channel. There's more of a channeling market up here, but what's going on here, I'm not too sure. This is converted more into a range. But what's the macro scene telling us? We have to go to the weekly chart. Let's see if we can make sense of this. So I think this is going to be a tough one. Actually, maybe not. Maybe not. I think what we've got going on here is the early stages of a channel. We only got 4 data points really to work with. This swing low up here and down here. So it does look like a channel is being carved out here. So for the channels, we can use this thing called the equidistant channel drawer. That's all it is. It's a channel drawer. It just makes the top and bottom lines symmetrical, so we can line all the dots up. And remember, not everything has to be lined up perfectly. I don't have to grab that swing low down there, because this whole thing could have just been an overshoot. But we can see consistently through there that there were some lows. We've tested that one there. So I think we've got more of a channel going on here. We might have to, sometimes these are a little bit fiddly to get lined up properly. I think that's kind of what we got going on here, this channel. Now if we go back to the daily, it's actually starting to make a bit more sense. So this is more of a channel. Wouldn't really call it a great market to trade. In this channel may it may morph as it evolves. We're only in the early stages. Sometimes there isn't a real clean answer. Sometimes the market is just stale crap, and you just can't really do that much with it. But if you can't see the macro structure, then and it's that messy, then yeah, it's probably worth avoiding. And the US dollar yen hasn't really been the best market to trade. Quite volatile there, actually. The US dollar Swiss franc, looks like we've got a channel here as well. So all the US dollar stuff we might see a lot of channels with. So there's the channel top there, and the channel bottom there. Might have to adjust that. We can extend these out like so, and that's what we got. We can see the markets bouncing between the top and the bottom of the channel. I do have the battle station loaded on my template here, and you can see that when you get channels, the moving averages are basically useless, because this. Sorry, I just had to pause for a second there, answer the door. But yeah, what was I saying? Yeah, the moving averages become useless in a channeling market, because the way that the market swings so aggressively like this, the way that the moving average is designed to work, it just basically throws it off too much. So if you're using the battle station, you can press the M key to clear that up if you don't want the moving averages displayed. They're only really good to spot mean reversions and help with trend dynamic support and resistance. So, but as soon as the corrections and the swings get too volatile, like too extreme, the moving averages just get cut through so easily. All right, US dollar, Singapore dollar. I'd say this market was in a sort of like a channeling trend here, but we'll go to the weekly to see what's going on in the weekly. Previous week we see a big rejection there, and do we see any obvious structure? I mean, I see a giant range here, but in this local price action, I think what we see here is a range breakout. So we can map that structure there. We definitely got a strong level through here, and we can see that the range bottom is down there, and we've broken out of that. So I guess we don't really know what structure this market is following. I guess if we want to look at things from, like I said before, if you don't understand what's going on, to take a step back and keep taking a step back till you see what's really happening. The next step back, I think, for structure is really up here, these highs. So we could say the market's coming from this overall range low down here and it's trying to make its way up to that high there. But a lot can happen between here and here. This is the weekly chart zoomed out. So what we're actually seeing is sort of a transitional phase of the market where it's broken out of one structure and starting to form something else, whether it's going to be a trend, it's going to make a new range, is it going to start channeling? We don't know because it's just in the initial phases of the breakout here. So I think mapping the previous structure until we know what's going on with the current structure is probably the best thing we can do here. And that's fine because we're just working with a breakout scenario overall, so we can just work with that. So if we go to the daily, we can see that there's the breakout of the range. What I'd be looking for with a breakout of a range is just signs of strength above the breakout event. So the breakout event obviously is the breakout of the range here. I'll be looking at signs of continued strength above the breakout event to prove that it's not going to be a fake out and the move is going to be sustained and it's going to turn into something. So because we may get a full correction back to here, but that would be quite a large swing, and it's definitely an area of interest to watch, this focus point here, because it's the old structure, of course. We might be able to refine that a bit, but that's basically what we're dealing with here is just a breakout, and we're just kind of waiting for the market's next signal to tell us if we can get in with the breakout momentum or not. US dollar CAD daily chart. We're coming down from a downtrend. We've bounced off something down here, and now we've transitioned into more of a bullish environment. We're getting higher highs and higher lows, but we've had actually a harsh correction up here. You can see there's something's going on up here. Looks like a fake out move. So I would say that we've got some sort of range developing here. It's just my forecast before we look on the weekly. So this is like the US dollar, Singapore dollar. I think the overall macro is a range, like a huge range, but it's a little too far out to be mapping that, because it's going to take weeks for us to get up here if the market even wants to go up there. From here, since we're on the weekly chart, yeah, it took 60 weeks to do a full range cycle last time, and even here, even worse. So we've got like 2 years to get back up the top there, and 1 year to get back down. So you can see it's a bit unpractical to be mapping that top and bottom and just calling this a range. We need to work with the localized structure. So I think we've got a range going on here. Just basically what's been happening with the daily chart. Just looking at the evidence down here, we can see that obviously the market bounced off structure there, and we can see that there's a big fake out going on through here, and the market looks like it's going to cycle back down to the range bottom there. Not a very clear one, but as soon as we get a cycle back down and a bounce, we'll be able to confirm that as a range. But just given the way the market's reacting around these levels, it looks like we do have that range scenario going on, but it's not confirmed yet, if you feel what I mean. But we can see, looking back here, there's a level there. The market's kind of been interacting with that level as it's swinging through here, but you can see that it's a bit messy because that was a channel structure as the market was coming down through there, and then it just dropped off, and you can see that we stopped behaving like a channel somewhere around here and just turned into a full vertical move, a full drop-off move there. But anyway, that's my take on the US dollar CAD right now. And again, if you're new and you can't identify the good structure to work with and make sense of the market, no biggie, just leave it, because it's probably, if things are starting to get a little too hard to analyze or getting a bit tricky, it's probably not worth it. Could just be, a messy market, consolidating mess kind of thing. Okay, the Aussie dollar. I don't want this video to go too long, so I might only do a couple more interesting markets and then we'll just call it there, because I'm going to repeat myself a lot. I can see it. Now, the Australian dollar, what do we have on the macro view? The macro view on the weekly here, what's the recent structure? I think we've had a breakout of this range here, and we're looking at something similar like the US dollar, Singapore dollar there. So we had this range here, we've broken out, and we're in that breakout phase at the moment. What is the next structure? Could be, it looks like a nice trending market at the moment, lower highs, lower lows. So we'll just be looking for the market to show weakness around the mean value there, or off lower highs. So this area around here could be a nice hot spot for a sell signal. You can see there was some previous low made there. We have a swing level through there, and we'll just be looking for a trend trade. It just looks like a nice trending environment at the moment. There's no like hard structure like a channel or a range or a larger squeeze pattern in play. It just looks like the market's broken out of a range, and we're working with that breakout momentum, and it's formed itself as a nice trending kind of structure there. So just looking at things like swing levels and tests and rejections of lower highs and stuff like that. Just looking to get in with the trend until we can find a structure. I mean, if we want to get real granular, generally with trending markets, they usually are. There usually is a channel or something embedded in there, so we can get this equidistant channel and like really force the issue. But I mean, I think we're just getting a bit over the top here. You can see that there's a bit of a channel going on there, but I don't really like that. I'd rather just prefer to work with the stepping down of the market through lower lows, lower highs, and just reading it like that, and just leave the hard marking tools for the real firmer channels, real harder structures. Okay, so this one looks interesting. The New Zealand US dollar is one thing I wanted to bring up in this video. I brought it up in the past. So what happened with my level here? Did I delete it? So we'll put that old range level back there. I think I deleted it. Okay, so here's an interesting one too. Like we got the classic breakout and retest. So we have a breakout of the range. Now remember when I said when the ranges break out, okay, and you break out of structure, doesn't have to be a range, could be a squeeze pattern or something like that. A retest of structure and a strong signal is often a good swing trade as well. So I didn't catch this one personally, but obviously we had a breakout. This one was a bit weird. It came back and retested it a second time and then gave us the signal, and that kind of worked out. But to be honest, I probably didn't notice that and probably would have overlooked that because I just didn't have this structure marked out at all, because I've been a bit lazy with the charts. As I said, I've been developing for the last couple of weeks. It's been intense, so I've been neglecting my technical analysis. But if you have everything marked out spot on, you can spot stuff like this and, oh yeah, that's a breakout retest kind of thing. Okay, there's all the stuff we talk about in the war room and in the price action protocol. You can see that a lot clearer. Now, another thing that I wanted to drive home here is sometimes people are busy. You want to probably go through and have all your charts structures marked out. You probably don't, and you really only have to do this probably once a month, doing the macro map out of your markets. But just to make things even faster when you're coming back and checking the charts, get the text tool out and put a reminder on the chart of what the actual hell you were trying to do here, or what you're looking for, so you don't have to reanalyze the chart every time you come back to the charts, because I'm looking at like 30-40 markets here. You don't want to have to reprocess every single one each time you look at it, even if they're all simple. We want to reduce that processing time. So in the description, we'll just put down what we're trying to do here. So we're just looking for cells with trend of low highs. Okay, just something that you would understand. You don't have to write it like I do, because that's what I'll be doing here. I'm looking for the next sell signal off a lower high with this trend. All right, and we can see the market's correcting here, so we're moving into a position where the market could make a lower high. So leaving a note here is, it's kind of like just pops out at you. You don't have to think about things too much. You'll see it, you'll know what you're thinking. It just refresh you straight away. It's like caching your analysis for next time. So there's that. Use your reminders. Now the New Zealand dollar, this looks like a very messy market, and we can see lots of different microstructures in the overall macro structure, but what is actually going on. We'll go to the weekly. Now, I think we've got some sort of exotic structure going on here, not really ones I like to work with. We can see the bottom of this market is reacting with this part of a squeeze, but the top part is actually also descending like so, because we only got two major points to work with there. It's kind of like a tilted squeeze pattern. They call them descending triangles, but I can't remember if there's a special name for the geometry of this. But it's a squeeze pattern, but it's also slanted. So yeah, I don't really like to work with these ones. They just make me feel a little uncomfortable. But when you map it out, it basically looks like that's what's going on. Sometimes when you map stuff on the weekly, it doesn't translate to the daily very well, just the way MetaTrader works. Anyway, you get the general idea when you mark it like that. I would personally probably avoid trading this market because I wouldn't really want to buy off there. I mean, sure, you could, but again, I personally just don't like to work with these structures, and you can see how heavy the consolidation is here as well. So you got to look at that. You got to look to the left and evaluate, what's going on. I think just going back from the thing I was saying at the start of the video, you got to focus on what money likes to make your life easier. You want to follow the big money, and I'm not talking hedge funds and all that sort of tinfoil hat stuff, trade with the banks and all that bullshit you hear. Just the general market. What does the actual market like? And at the moment, I told you it's the US dollar indices and stuff like that. The New Zealand dollar here looks a little left out. There's not much volatility going on. Any trades here are probably going to be really tough. It's going to be hard to pick out the winning trade here if there is a move. So I think it's not really the market to be focusing on. You can see there's even a micro structure within the macro structure here, which it's like squeeze patterns and micro ranges everywhere. So we can analyze this all day and come up with all sorts of geometric interpretations of this price action, but at the end of the day, it's still crap, and we want to focus on better markets, and you should just do that. Just keep the better markets in the front of your watch list. Australian New Zealand dollar. All right. So the weekly, the weekly looks like crap. So this market is quite a low volatile market. It's a cross pair, and we can see over the years it's been cycling up and down through these major highs and lows. But what's actually going on in the current minute? It's tough. I think we could definitely plot that down as a floor in the market at the moment, and I don't know, it kind of looks like we've got this major descending level up here that the market keeps reacting with for the moment. We're on the weekly chart, mind you. It kind of looks like a bad daily chart, but yeah, this is still the weekly. So this one's a tough one. We definitely got something going on down here, like another level that we could probably mark for the future, but at the current moment, it looks like we're on support here of this this overall slowly evolving squeeze pattern. Now, when we see, so we see a correction, and am I looking at a channel here? See, this is what I'm saying. If it starts to get too hard, it's probably not worth it, and this market is definitely not worth looking for swing trade opportunities or trend trade opportunities. So we've got some sort of channel going on here, I think, and that might be what we really want to sort of map out. I think this is what's going on here, guys. Yeah. And it's not very clean. We've had some nice moves up and down here. So we would just bring that into view. It kind of looks good, doesn't it? So I think that's what's going on. But still, within this channel, it's been a bit of a rough ride. Okay. Now, Euro Pound, I'll do this because, well, this has been a bad market as well. So I'm not sure if we'll be able to do much with this either. Remember, we want to focus on the local structure. We're on the weekly chart here, and I don't know if we can we just call this a range? I think this is one of those. We can definitely see that this support it's lining up with previous interactions as well. So it's definitely something there. I really just think this is a range at the moment, but there's not much we can do with this. We've had two tests up the top, a strong bounce off the bottom, and we've just sort of been floating in suspense in between. So yeah, this is not really a market that you want to be trading right now for trending stuff. So yeah, some markets are just unsalvageable at their current state. You just have to let them go. We'll move on to gold. Gold is always a happening market. So we will zoom out, get the structure here. So it's like as I go through further into the watch list, the more difficult these markets get. So gold, what are you doing? What is gold doing? Are we doing some sort of squeeze here? I think we're doing some sort of squeeze. I think so. This is, and it looks really janky too. Not a very clean. So here we had some kind of expanding structure, and I try to stay away from the megaphone type structures. But I think this is what's going on here. Bit of a weird one. Gold ain't trending. That's the bottom line. So what is it doing? It's bouncing between this market top here, and we found bounces off the bottom. The focus point's been up here and off here. I mean, I can't really get it any more simplified and clear than that. That's what gold is doing. I tried to trade gold, actually. I went for a long, and I just got caught in this consolidation here. So I just ended up pulling out of that. It got really frustrating, actually. Gold has been doing nothing the last couple of weeks, but yeah, that's the structure. All right, I'll pause the video and I'll look for another interesting market. Actually, we'll look at silver here, the next market, because that is it's always an interesting one to do. Silver can be really strong or it can be really grindy. It goes from one extreme to the other. So I think what we got here is obviously we've got a ceiling, all right, and now we've got a bottom trend line. So it's like an ascending triangle kind of structure, and all in between is the market cycling. The cycles aren't very clean either. Like, we're not going from the bottom and cycling up nicely and doing these ones. I might even be able to refine this, because it looks like there's because like I said, sometimes when you mark stuff on the weekly, it doesn't translate very well. So I think we may be able to work it like that and just call these overshoots, because we've got a data point there, and we're testing that there as well. So we're on the bottom of the structure, and we can see we had a nice response off that as well with silver. I wonder if we got a signal there that I missed. Nothing obvious. No, nothing. It's just been a hard bounce, and the market may not follow through. It may come back down and retest it and do all sorts of stuff. But yeah, in the intermediate price action, I think we've had this downward channel. I don't like to get crazy with market channels and stuff all over the chart. Just try to keep it as clean as possible. But yeah, this is definitely a good location to look for going long, but it's a little bit late to the party. It's already started to mature. All right, here's an interesting one. Euro CAD. So we're looking at this on the daily chart. We see a lot of mess going on here. Some harsh moves going up and down. This has been a real dirty looking market. Let's go to the weekly. You see there's a large rejection on the weekly there. This really putting some heavy selling pressure going into this week. So let's zoom out. Now, when we zoom out, I only got back to 2013 here, but we can see there is a major structure down the bottom here that the market has been bouncing off. Well, I guess we can put it back here. Just leave it like that. All right. And like I said, mapping stuff on the weekly doesn't translate too well. All right. So we've probably got something going on like that. As for the top, we've got a top there, but you don't have to encapsulate all the price action. You just need to highlight the focus point on what's going on, like in the local price action. So I think we can just say that this bottom trend line structure is very important from a very, very large macro point of view. So now we'll go to the daily, and I might be able to zoom out a bit on the daily and turn that off and fix this up a little just so it lines up nicely, because I think we're just a little off. I've got to go back to the weekly and move that down so it's actually in view on the daily chart. There we go. So I've lined up those 2 points. I did say in the past, remember, you need at least 3 points for a trend line. Well, I'm actually kind of going off back here as well, but I just didn't try and draw it all out that length. And also here as well, we started to see a bit of a bounce. But have we actually interacted with that trend line? You know, we're probably more something like that. I'd say so, because otherwise why would the market bottom out there? So anyway, we'll zoom in on the daily chart. Now we can see, so this is interesting because we've had massive selling pressure on the weekly chart coming back into, it looks like the market wants to come back in and attack this major trend line support here as well. So this is a very big macro trend. There's a very big focus point for the market, like huge weekly structural area. So any kind of large buy signals that pop up here could be very valuable, but it will be very interesting because we did see on the weekly chart that there's a very large bearish rejection candle coming in, and there's probably going to be some selling pressure to flow on from that, and we're going to see a retest of this structure this week. So it'll be interesting to see what happens. Now, do I want to sell through there? Like, selling through these major structural levels is so dangerous. And you may even get some gratification as the market actually breaks through. But these major levels usually produce fake outs when the market punches through them. Okay, so you have to be really careful of that. If anything, I'll be watching for strong buy signals at this structural level, or the fake out event. So the market comes through, tries to get under there, but the price action just screams back higher. Market participants say they just don't want to go down there, and this is a classic kind of stop run because it's a major structural level. There's going to be a lot of people with their stops under there, and if they start getting triggered underneath that level, you get that cascade effect, and you get that fake out event, which is born, and then a lot of stops getting hit down there will accelerate the price lower for a little bit, but then eventually the market pressure will bring it back up. You get the whole fake out event there, and you're combining the fake out with a major structural turning point is a very powerful counter trend trade setup. So this is one where you probably want to leave a note as well and say, watch this. I'll just put major trend line for bull reverse signals or big fake out events. Okay, so now when I come back to this chart, I don't have to reprocess the whole thing, zoom out, get the big picture again and reprocess it back into this. I just come back, oh yeah, I remember, and we'll see what happens here. All right. Next chart is the pound Aussie, and it looks like a nice trending market at the moment. But let's see if there's any macro structure involved here. It looks like a range breakout that we're playing with here. Yeah, so the old structure, we'll just draw one level here. That's that range top. Again, we don't really know what, or there isn't really a superstructure to work with here, because we're breaking out of that previous range. This is the previous range top. We've punched through it, and we got some nice follow through. So we're just looking to buy in with this breakout momentum, looking for the buy signals off higher lows. So we again, as I said to you before, you don't want to buy high, because any kind of retracement is going to, when the market comes back down, you're going to get stopped out quite easily if you buy too high. And very rarely, some people do buy high or sell low, and the market just continues, or it becomes like a very hyperbolic move, and the market goes vertical, and it works out. But most of the time, it won't. Like, you got to sit through these corrections and have your stop loss threatened. But it's better to actually wait for the corrections first and then get in at the better price, what I would call in position with the trend. So somewhere around the moving average, I don't think this is just very high speculation here. We could have some sort of channel developing here, but if the market did actually correct about this much and lined up with the previous kind of correction length there, that would be a good case for a buy. Any kind of strong buy evidence above the breakout level, like we've got the bullish momentum going, we just want the evidence that it's going to continue, and we want to jump on those signals. Okay, I was going to end it there, but I'll click the next chart, and we've got something interesting here as well. So this looks like a fake out event in the making, and we could be looking at a sell opportunity here. I'm already in a trade, but I'm jealous that I'm not short on this. So we'll go to the weekly. I think we're just going to find a range. I don't really actually see that structure on the weekly chart. I see it on the daily. The weekly kind of tells us that we've got this. We'll zoom in a bit. Do we have like more of a channel going on here? When you have this like harsh correction here that sort of like starts to give you this like channel feel like that. But on the daily, I can't overlook that range that we've got going on. I think, yeah, there's no macro structure. Well, This one is throwing me off a bit to explain. I definitely see the daily range there, and that's like really clean. But what's going on the weekly? I would put a level there, but I wouldn't really call it a structure top. Really? Oh, actually, let's zoom out a bit more. No, that didn't help. No, this is the swing points on this. They're all over the place. We're getting highs and lows just popping up everywhere. I'd say here we had some channel orientation going on there, but we kind of dipped below that, and now it's doing something else. The closest I would say is a potential channel there, but it looks quite ugly. It's not very clean, and I wouldn't want to just force mark that just because. But here on the daily, I can definitely see that there is. Shall I get the horizontal levels out? We definitely got a range going on here. Okay. So if we go back to the 12-hour, where was that signal? Yeah, this looks. So we've got the nice 12-hour range here to work with, and that looks like a big fake out signal. Market tries to punch through the structure. We get the initial breakout. The market gives a very good attempt to go through. Again, classic stop run kind of stuff. People who are trading this range would probably identify that this is resistance. The stops will be above here somewhere. The price punches through and starts interacting with the heap of stop losses on the market and causes a cascading event, and then everyone's stop losses get cleaned out, and then the market slowly fades that initial breakout move because it's not sustained. And those fake out events are quite strong. So I anticipate the pound New Zealand here, we're probably going to see another cycle back down to this range. And with a fake out signal, they're very strong. So I am jealous that I'm not on board on this. And I already have a trade going. I wish I could position into this, but I've got something going on at the moment, and I really can't take on more risk. So nice little fake out signal for you there. So look, here's the Dow. Just gone through the watch list, and not really anything new that I haven't already talked about here. Most of the other markets just involve the stuff I've already just explained in this video. So I'll put an end to it here, and hopefully that helped you a lot with mapping out focus points, looking at structure, planning a trade with, especially if you like counter trend trading. You definitely should utilize this kind of analysis, like looking at the macro picture and sort of work your way in like that, and just avoiding messy markets, following what money likes, and just complying with the market structure and working with it instead of working against it or pretending it's not there or not having it on your chart and being ignorant to it. You really can clean up your analysis if you do just map the right levels out. So hopefully that helps, and give me your feedback, and best of luck trading for the rest of the week.